Is there a record holder for the quickest person to get from nothing to $1 billion? Jay Walker became a millionaire in about a year, but Warren Buffett needed 55 years. When he debuted Priceline.com in the midst of the dot-com bubble, his wealth skyrocketed from nothing to the billions. Unfortunately, as the bubble burst wasn't sustainable, so his net worth crashed. Today, Buffett remains at the top of the list and shows no signs of slowing down. Soon, the type of fortune like this is what you should strive for. Money is a tricky game. It's a smart, competitive, and unforgiving environment where those who don't play by the rules are left behind. Most individuals don't know how to make their money generate more money, which is why they will work hard all their life, but yet end up disappointed. Basically, they have no idea what they're doing when it comes to financial investments. Say you've been saving and have a spare $1,500 in the bank. That's quite a milestone, considering that around 65% of Americans do not possess $1,500 laying around. Let's presume you're not going to waste your money on yet another pointless device or luxury shoes that you'll wear once and then store for years before eventually throwing away. However, the question is, where do you put your first $1,500? Do you put it towards the stock market or real estate? What types of stocks do you invest in? Is $1,500 sufficient to begin investing? We'll address all of those questions and a lot more. So don't forget to like this video and let's get started. Consider the following example to fully understand how investing works and what it is. Let's imagine you worked really hard and saved $250,000. You could go to a Ferrari dealership and buy yourself a luxury vehicle to show everyone how successful you are. Or you could buy property, a house for example, and lease it. You will get a minimum of $2,500 for every month. If you decide you no longer want to lease your house, you may sell it and recover your initial investment. In reality, the worth of your investment may increase, allowing you to sell it at a higher amount. And that is how your money makes more money. However, real estate cannot be purchased for $1,500. It's not enough for a down payment, but it doesn't stop you from investing that $1,500 somewhere else and letting it multiply. The simplest solution is to place it in a savings account and earn interest. However, why does the bank reward you for keeping your money instead of charging you? Simply because the bank will take your money and lend it to another person at a higher interest rate, then share a part of their profit with you. In a nutshell, that is how banks operate. The only drawback to this method is that the rate of interest on the savings account is so low that it simply isn't worth it. The best rate you're likely to obtain is 1.2%. That implies that if you put $1,500 into your savings account today, you will get an extra $18 in 1 year, which is incredibly low because the Fed holds an inflation rate of 3 to 5%, which implies that if you don't obtain at least 3 or 5%, the real worth of your money will decline over time, allowing you to buy less items each year. But why are banks' savings account interest rates so low? Because interest rates are generally low this year as a result of the pandemic. The Fed was driven to cut them to urge everyone to borrow and spend money. Once we are out of the crisis, the Fed will raise interest rates to 1.5, 2.5, or even 3%, which implies saving account interest rates will climb as well. Hey, I hope you're enjoying this video. Let me know in the comments if you have any other questions about investing. Let's return to the video. The second choice is to purchase government bonds. The government bond is a contract bond issued by the government to collect funds to support government expenses. Let's assume the government wants to build a hospital but lacks the funds to do so. Therefore, it releases an IOU, a piece of documentation that states that whoever possesses this bond owes the US government this much money with interest. Obviously, this is an exaggerated example, but you get the idea. Government bonds are strongly influenced by rate of interest, but because of interest rates are incredibly low this year, government bond interest rates are just under 1%. But a couple years ago, when interest rates are on its peak, government bond interest rates were as large as 3%, which is not bad because government bonds are the best and safest investments you can think of. Any investment entails some amount of risk. For example, if you borrow money from the US government, are there any risks that the United States government would default on its debt? The whole US economy may have to collapse in order for the government to become bankrupt. As a result, US bonds are regarded as the smartest investments in the world. However, if you want to get a bigger return, like 10, 25, or 50%, you should try putting your money into the stock market. For instance, Google's stock price jumped by over 32%. Amazon's stock price has surged by more than 75% this year alone, but Tesla's stock price has risen by 721%. Yes, you heard correctly, 721%. The question is, why would someone invest elsewhere when they can double or quadruple their money in the stock market? The simple answer is risk. There isn't much risk associated with government bonds, for example. To a certain extent, it is risk-free. However, when it concerns individual businesses, there is a chance that the company may collapse, declare negative results, or any other unfavorable news will cause the stock price to fall. The business may develop a product, and when the public does not like it, this might result in some unfavorable articles that can pull the price down. Thus, higher returns come with more risk. Google is a well-established corporation with less risks of failure than Tesla, but it also has less potential to develop than Tesla. This explains why Tesla gained by 721% this year, while Google increased by just 32%. You must consider how much risk you can handle without going insane. If that $1,500 is all you have left, then risking it isn't the best decision, since if things go wrong, you could lose the majority of it. Investing in the index fund is one approach for investors to reduce their risk within the stock market. The most well-known is the S&P 500, which monitors the top 505 U.S. businesses. Therefore, an index fund will invest in all of these top 505 businesses. Some of these businesses will undoubtedly fail, while others will succeed. According to historical statistics, the average rate of return for the S&P 500 during the 1920s has been roughly 10%. This means that purchasing a stake of index funds entails owning a little portion of the top 505 U.S. businesses. The top 3 index funds are Fidelity Total Market Index Fund, QQQ or Invesco Index Fund, and VOO, Vanguard 500 Index Fund. They are all excellent and invest in nearly similar companies. But how can you get your hands on these index funds? Where do you even begin? First, you must choose a broker or someone authorized to sell you some stocks. It was always somebody. You had to pick up the phone and contact him, asking him to sell you several shares. Recognize the movie The Wolf of Wall Street? He will contact people all day and attempt to sell worthless investments. But thank goodness we've arrived in 2022, when things are a lot better and simpler. Brokerage businesses such as eToro, Robinhood, and Webull have developed applications that allow you to buy stocks from the convenience of your smartphone. You only need to download any of these applications and join up to begin investing right immediately. I attempted to keep this video as simple so that anyone interested in investing may get started right away. Usually, you would like to start investing, yet you have a million questions in mind. Thus, you start researching various topics and get tired after a while, and then you quit and try again months later. So I tried to tackle all of your concerns in this short video. Hope you have learned something from this video. What are your thoughts? Comment down below. If you enjoyed this video, make sure to click the like button, and also don't forget to subscribe to the channel and hit the notification bell for you to be updated on our latest videos. See you in the next video. Thanks for watching.